So should you buy an apartment or a house that you will rent to someone and generate revenue from that? Or should I invest in stocks and bonds? My take is that you should have both. You should have a bit of real estate and you should have a bit of liquid assets, stocks and bonds. Now, what are the pros and cons of one and the other? We need to talk about three things. The first one is the return. The second is the risk. And the third one is leverage. So in terms of return, in Belgium, it is shown that, real estate over the long term, you should expect 4-5% per year. It's something that's reasonable to expect. The stock market, on the other side, it's more around 7%. So it's higher return than housing. A psychological aspect that makes people think that housing market is very stable and cannot crash is actually you don't have a price in real time. On the stock market, you see every second actually how much is worth it. And if the market goes down, you see that your portfolio went down. But with a house, even though it happens, the value of your house or your apartment probably drops, but you don't notice it because there is nowhere on the newspaper, on TV, or in an app where you can see real time, my house is not worth that anymore, but has dropped by 10%. Now, people think that a house is something that is super stable. It is true maybe if you have a diversified portfolio of houses. And by diversifying, I mean all over the world, in all segments of real estate, commercial, private. Here, when you are all concentrated on one apartment in Belgium, there is a case to ask, are you really diversified? The other thing with real estate is actually it's more burden than just invest in stocks. I think that people who don't have real estate don't realize how long it takes actually to take care of the tenants, of going on weekend to repair a toilet, change a light bulb, and all those small things that do not exist when you invest just on the stock market. An advantage, however, of investing in real estate is the leverage. You can do that if you are very wealthy, but if you are not super wealthy, you cannot borrow against the asset that you own. Unless it's real estate. Taking a mortgage to buy a house, it's commonplace in Belgium. Nobody buys actually the real estate directly with cash. And so that ability actually to create a leverage and to take debt to finance it, it's actually improving your financial return. So my take is that try to have both if you can, because there's diversification, but don't over romanticize the advantage of real estate, because at the end of the day, a portfolio of stocks and bonds diversified, to me, it's easier to manage, it's more return, and it's less burden.